Good day, everybody. Welcome to the Forex Fundamental Analysis for August 3rd, brought to you by OctaFX. OctaFX, an award-winning broker with one of the lowest spreads in the industry. Before we begin, some housekeeping, some disclaimers. Trading foreign exchange on margin includes a high level of risk and may not be suitable for all investors. You should not invest money that you cannot afford to lose. And a hypothetical trading disclaimer: all the information in this webinar is provided as general market commentary and does not constitute investment advice. A few quick words about myself. My name is Yohay Elam. I'm a Forex analyst. I used to be a retail trader, a computer programmer. I founded Forex Crunch back in 2008 and focus there and also here on fundamental analysis. Of course, we'll touch also on technical analysis. So on the agenda today, as always, all the stories moving markets, the events to look out for. We have two big ones, the BOE and the non-farm payrolls, key levels of support and resistance, and we'll do it for all major currencies. When we focus on the dollar, we'll discuss dollar yen, and we'll move to the world's most popular currency pair, euro-dollar, continue with the pound ahead of the BOE. We'll preview that, discuss the Australian dollar and the Canadian dollar towards the end, two commodity currencies. Okay, top stories. So the US dollar, as you may well know, is falling. It is sliding, and the main issue is political issues. We have Trump with some chaos in the White House. The healthcare bill didn't pass. This is the main issue, okay? These are the main topics, and it still weighs heavily on the dollar because the president, the administration, cannot pass any kind of tax reform and infrastructure spending that markets want so much. We had the Fed decision last week. The Fed tried not to rock the boat, but markets saw it as dovish because there was no clear hint about a rate hike. US data is actually getting a bit better. We'll show that soon, but markets don't buy it, at least for now. The US dollar remains under pressure. Some data. Okay, we had GDP, gross domestic product, the first release for Q2. It came out 2.6% annualized, a bit better than expected, or as expected. In any case, it's a bump up from the first quarter, so it's okay news. We had yesterday the ADP non-farm payrolls. It came out bang on expectations. We had the ISM manufacturing PMI. Both serve as hints towards tomorrow's non-farm payrolls. Also looking good at 56.3. Nothing really to worry about. Durable goods orders were mixed, 6.5 on the headline and minus 0.2 on the core. Not really great, but not a disaster either. And import prices dropped, well, as expected. Consumer confidence is on the rise, 121 points. All in all, the data in the US used to be terrible. Now it's okay. So that is not the reason for the fall of the US dollar. Next big events. Today we have Thursday, jobless claims at 12:30 GMT, all times here at GMT. More importantly, we have the ISM non-manufacturing PMI. This is a long name, but it's basically a survey about the services sector, about the biggest sector in the US economy. And tomorrow we have the non-farm payrolls. If we look already towards next week, before we preview the non-farm payrolls, we have job openings from the US, JOLTS it's called, and then unit labor costs, and well into next week, Friday next week, we have the inflation report, which is all important for the Fed. But let's focus on tomorrow's big event, the first Friday of the month, non-farm payrolls. So we're expecting on the headline, in terms of job gains, 183,000 jobs gained, which is very healthy, very good after an even better result last month, 222,000. Wages are expected to rise 0.3. after they advanced 0.2, and the unemployment rate is expected to fall from 4.4 to 4.3. As in most of the previous months, wages, salaries remain more important than job gains. So what are we expecting? If we have wages stuck at 2.5 year over year, that was what we had last time, then I'm expecting some kind of a wobble. No big moves, more of a consolidation of the current losses of the US dollar. If we have an acceleration to 2.7% or higher, then the US dollar could rise, because that would show that the US economy is heating, that if we have higher salaries, we eventually will have higher inflation, and the Fed will need to raise rates, and this strengthens the dollar. Otherwise, if we have a fall below 2.5, it will be very, very disappointing, and the trend, which remains against the US dollar, will likely extend. Okay. In any case, the next moves for the Fed are a balance sheet reduction in September. It looks very certain. We had one of the Fed officials basically saying that it is already baked into the cake. Okay, so that's a sure thing. No surprises expected there. The main question remains that about the next rate hike. Currently, it is expected in December. That will conclude 3 rate hikes for 2017, but nothing is certain. According to bond markets, there is a 45% chance only, so it's close to 50-50, even a bit below, and that weighs on the US dollar. That makes the dollar weaker. We will hear from the Fed towards the end of this month. Even though it's August, it's still a busy month for markets. We have the Jackson Hole Symposium held in Wyoming, in the west of the United States, the last weekend of August, and that will be very, very interesting. Okay, dollar yen in general, it's on a clear downtrend. We had the US dollar falling across the board. The Bank of Japan is unable to keep the pressure on the yen. Remember, for Japan, for the Japanese export, they prefer a weaker Japanese yen. They made some efforts, but it didn't work out for them. It's all about the US dollar and the drop of the US dollar. The drop currently is in range, okay? So the moves are within the wide 108.10 to 114.30 range. We'll show the charts very soon. 108.10 is critical support. We're still a bit far from that, but the trend is clear. Now let's look at the charts. As always, we'll look at the OctaFX MT4 platform. Here is dollar yen, currently 110.61. Okay, you can see how the pair advanced on this uptrend, and once it fell, once it even moved sideways, the downfall began. So the levels we're talking about from top to bottom, on the top side here, on the upside we have 114.30, then 113.60, 112.60, 111.80, 110.70, 109.90, which is the most recent low right here, okay? Then 108.80, where the uptrend began, and if we look even lower, 108.10. If we fall below that, it might be a free fall until 105, okay? So all in all, the trend is to the downside, but again, within the wide range. Remember always the bigger picture. Remember that the trend is your friend. Okay, so here we are, and let's continue with the next currency pairs. So let's talk about the world's most popular currency pair, the euro. So euro dollar reached the highest levels in 2.5 years. It even topped 119, but that was for a very short period of time yesterday. Okay, that did not hold. All right, but in general, the trend is clear to the upside. It broke the 2015 August 2015 high of 117.10. It's a clear move. The biggest driver of the euro is that the ECB, the European Central Bank, is set to announce the beginning of the end of QE in the autumn. The European Central Bank is printing money, 60 billion euros a month, and it's going to run until the end of the year. But the trend, the direction of travel, is that at the beginning of September, when they have the meeting, they will announce that from 2018 they will print less money, eventually stop printing money, and further down the road raise interest rates. So that is the direction. They're coming from a very loose point. And data has been positive, has been supportive. So GDP, gross domestic product, the economy in the Eurozone advanced by 0.6% quarter over quarter. That's very healthy. That's equivalent to around 2.5%, similar to the US, and for a second quarter in a row. Core inflation surprised to the upside by rising 1.2%. So even inflation, again, coming from a low point, but it is picking up. Forward-looking PMIs point to further growth in the Eurozone in the manufacturing and the services sectors. Something I didn't mention here in the presentation is the unemployment rate continues falling, again, from a high point. So there is room for improvement, but the direction is positive. It's currently 9.1%. And in politics, after, well, we had Macron winning French elections. That was already 3 months ago, but we have elections in Germany in around 6 weeks, and Chancellor Angela Merkel is leading the polls by about 18%, and markets like her and like stability in general. Okay, next big events. We have retail sales today at 9 GMT. We have factory orders tomorrow at 6 GMT, very early. And Centix investor confidence on Monday, and the German trade balance on Tuesday. All in all, these figures are not, I wouldn't say top tier numbers, but they're expected to show ongoing growth and support the euro. Euro dollar in general, the uptrend accelerated, and some ask, has it gone a bit too far? Should we expect some kind of a consolidation? Is a correction coming? Not only consolidation within the current levels of around 118, but even a downfall. I think it's more of a correction, but the trend remains to the upside. Again, a lot depends on the non-farm payrolls and other events as well. The ECB, the European Central Bank, and the Federal Reserve, the central banks are balanced, but again, doubts exist about the Fed hike. And politics, that's a clear winner for the Eurozone with after the French elections and with everything going around Trump. Okay, and also inflation and growth look a bit more balanced now. So maybe the euro lost its big advantage, especially in growth. But anyway, things are looking a bit brighter this summer in the Eurozone. Let's look at the euro-dollar chart. Let's see the clear uptrend. Again, it's the MT4, MetaTrader 4 platform of OctaFX. Clear uptrend since the beginning of the year, accelerating in the past month or so. Currently 118.40. We're looking at levels. If we have to look at higher levels than we have looked in previous weeks. We're looking at top level here is 120. If you're around number psychological level, the exact technical resistance level is 120.40, which was the low point in 2012. In any case, 120. Under that, we have 180.70, was a low point in 2010, and we had this false break above 118. So I'm still looking at 118.70. 117.10 below that was the high in 2015. Then we're looking at 116.20, 114.85, then 113, which was a very stubborn resistance, and once the pair made a break above this level, it never stopped. 112.30, 111.20 if we have a really big downfall. These are familiar levels, but again, the trend is more to the upside. I doubt we'll reach such low levels. Okay, so we'll see if we have a consolidation or stability, or a resumption of the uptrend. Okay, let's move to the pound and developments in the UK. So all in all, the pound is higher, deep into the initial post-Brexit levels, and the driver is the US dollar, not the pound. Okay, UK economy is okay. It didn't disappoint expectations. It grew by 0.3% as expected. It's slow growth in comparison to last year. Manufacturing PMI, which we had this week, was also positive, but construction PMI was a bit negative. Consumers are cutting down on spending in the UK because of the higher pound makes the cost of living a bit more expensive. On the other hand, we had new forecasts from independent think tanks, and these are a bit more optimistic than they were, let's say, a month ago. And there's high tension towards the Bank of England's decision. So today we have the services PMI. It's the biggest sector in the UK, like in the US. Then we have the Bank of England's rate decision at 11, and a press conference by the governor of the Bank of England, Mark Carney. If we look already towards next week, we have the Halifax HPI, house prices. There are worries that house prices cannot sustain the gains. And next Thursday, industrial output. Before we talk about the Bank of England, let's mention Brexit. The government in the United Kingdom is a bit torn between the camp of the soft Brexit, that means more immigration, more free trade, basically what markets want, and the hard Brexit, more independence, less immigration, less free trade. And this is hurting the pound a bit. There are some cross-party efforts between the governing Conservatives and the Labour opposition to negotiate a common approach to a soft Brexit, and this, on the other hand, balances the pound, but the lack of advance in negotiations so far in Brussels is hurting the British pound. Internal politics will intensify later. Now it's summer. They'll intensify in the autumn when the parties, both major parties, have their conferences. Okay, let's talk about the Bank of England. It happens today. It's called Super Thursday because we have a rate decision, meeting minutes. We'll know how different members voted, and QIR, that's the quarterly inflation report. This means this Bank of England meeting is more important than the previous one and the next one. So, regarding interest rates, no changes expected in interest rates, despite some hawkish talk from Mark Carney and some of the others. If we do have a surprising rate hike that would send the pound shooting higher, maybe even 135, some analysts are talking about that, but there are very, very few. Most expect no rate hike today. Last time, the last rate decision, 3 members voted for a rate hike and 5 opposed it. This time, only 2 are expected to vote for a hike because there was a change in the composition of the Monetary Policy Committee, the group of people that makes these decisions. A stronger pound weakens the case for rate hike. The Bank of England would like to see the pound rising to a stronger level to make inflation lower, without having to raise interest rates, which would hurt lending, which would hurt demand. Okay. In the quarterly inflation report, we will have new forecasts. Is inflation really rising? If they upgrade their forecasts about inflation, it implies more rate hikes because they have to cut down on inflation. If they lower their forecasts, fewer rate hikes. We had many mixed messages from Governor Mark Carney, so maybe now we'll have answers. Again, the Bank of England would like a strong pound, and they would not like to raise rates. Credit, also another point to consumers are taking more loans, and that is beginning to worry the Bank of England. All in all, we have many moving parts here. Uncertainty is very high. On one hand, inflation is rising, and they would like to curb it. On the other hand, there are worries about the economy, and they wouldn't like to suffocate the economy with all this Brexit uncertainty. So that's really a huge event today for the pound because of the high level of uncertainty. So all in all, the pound good, taking advantage of the US dollar weakness, bad, economic weakness in the United Kingdom, and ugly, Brexit negotiations a bit on the back burner for now because the Bank of England is in focus, but Brexit remains a major theme for the pound. Okay, and now let's look at the charts again. MT4 platform of OctaFX. We're seeing here the break to the upside, okay? Currently above the 132 level, but again waiting for the Bank of England. So if we look at levels from top to bottom, if we break above the current levels, we're looking at 133.50, then 132.40, the limit of the current move, then 131.20, which was a cap many months ago. Then 130.50, just above the 130 level. Under the 130 level, we find 129.75. Under that, 128.90 and 128.20. All levels are in play because there's really high uncertainty about the Bank of England. All right, let's run quickly on 2 commodity currencies, the Australian dollar and the Canadian dollar. So in Australia, the Reserve Bank of Australia, we had a rate decision this week. They left the rates unchanged and also the outlook unchanged. And that was a bit disappointing. We had a big rally in Aussie dollar. It was driven a lot by the US dollar, weakness of the US dollar, but the steam comes out of the rally. We had stable inflation, core inflation at 0.5 quarter over quarter. Good news from China, Australia's #1 trading partner, with the independent measure of the manufacturing sector accelerating, moving to the upside. On the other hand, on the same note, Australian building approvals jumped to 10.9% by 10.9, but trade balance, the most recent figure released this morning, missed with only 860 million. Next big Australian events, soon enough we have the Australian retail sales. Important, as in many developed countries, consumption is key. Next week we have business confidence by this bank, National Australian Bank, and we have the Chinese trade balance, also important. More Chinese imports that mean more Australian exports. Okay, I know Aussie dollar holding the highs. Okay, it broke above that 78.35 level, but it hesitated above 80. It had some altitude sickness over there. Volatility is looking good, and I'm really happy with that because we had a long period where the Australian dollar just did not move at all. Okay, let's look at the charts. Let's look at this retreat from the highs of the Australian dollar. So here we are. Let's zoom in a bit. We had a big break, of course, but now we're looking a bit to the downside. So levels from top to bottom. If we have a big break to the upside, let's say terrible NFP tomorrow from the United States, 83 is the top level. Then 81.65, 80.65, which was the recent swing high just last week. The 80 level, very round, very psychological, remains highly important. Then we're talking still about the 78.35 level to the downside, 77.50, 77.10, and 76.35 if we have a real collapse of the pair. Okay, and last but not least, the Canadian dollar. So also here, in theory, should have seen even more gains from the loonie. Higher oil prices support the Canadian dollar. WTI flirted with the 50 level. Canadian GDP, and the economy is growing fast, jumped by 0.6% in the month of May. Reports that, however, on the other hand, reports that the government is unhappy with the recent rate hike. That hurts the Canadian dollar a bit. And the pair may have reached its limits. Remember, we traded early in the year at 138.19, and now we're at the 125 handle. We dropped under 124.60, which was really strong support. Anyway, other pieces of data, retail sales advanced by 0.6. That was good news. Inflation is still a bit stuck at 1.2 in the core measure. Next big events. Tomorrow we have double feature for dollar CAD. At the same time of the non-farm payrolls in the United States, we have the jobs report in Canada. A modest rise of nearly 12,000 jobs is expected, lower than in previous months. Next week we have building permits, and well, that's it in terms of major events. Dollar CAD in general, the downtrend may have stalled, may have reached its limits after the huge fall, and the Bank of Canada's bullishness, which was the main driver of the pair, main driver of the Canadian dollar to the upside, that means dollar CAD to the downside, is beginning to fade. Okay, 124.60, talked about how it's an important level. We'll soon see that. Was only temporarily breached, and then from there the dollar CAD bounced higher. And yeah, the best thing is just to show you these levels on the charts. So this is the big downtrend, and now we're seeing some kind of a turnaround, this U-shaped or V-shaped move to the upside. If we zoom out a bit, you can see why 124.60 is such an important level. You can see it here as a low point, very significant point here if we zoom out quite a lot. And let's zoom in and see how this break was actually. Here we have the 124.60 level. It was a false break. To the upside, let's talk about all the levels. If we have a big move to the upside, we're talking about 131.60, followed by 130.20, 128.50, 127, 125.80, 124.60 right here remains significant, but we already reached a lower level of 124.15, which would be another cushion on the way down. If we fall even below that, we're talking about 123 and 121.80. So we're still looking to see if this is a correction, quite a significant one, or a change of course, or we've reached the limits. Okay, so that's it for today. Lots of things to talk about. Thank you, everybody. Comments and feedback are always welcome. And see you next week. I wish everybody a safe day and week in the markets. Take care with the non-farm payrolls. Do not use too much leverage. It's always an event that can be a bit volatile, a bit wild. And that's it. So thank you and bye-bye.